Warning. Possible side effects may include clarity of vision, loss of panic selling, loss of emotional trading, high probability trades, increased profitability, pissed off colleagues, and other profitable disorders. In some cases, profitability may increase over 100%. If you experience any of these symptoms, please tell your Lil Whale Discord immediately, as they could be life-altering.
A spot that they can go, a band they want to hear, and a beer they want to hold, a dart that they
this
can
challenge with $1,000 in hopes to turn it into $100,000. And I don't think that's rather hope anymore, since I've kind of made a substantial bit of progress since I've started. I've only been in this 3 weeks and I'm already at like $7,000. So I'm going to show you guys how I've been doing it. I'll be completely transparent with some of the risks that I've taken to get to where I've taken. But most of all, I'm going to give you guys a plan that would have worked without me taking some of the risks that I've had to take. That'll get you a little bit further at your own little pace, because gains are gains, whether they're they're $40 or they're $400. These add up. The reason why I can tell you that is because I can go back in my tracking history and I can see that most of my gains had been usually under $100. If I go back in my trade history since I started this process, most of my gains have all been under $100. So if everybody's earning 20% on their $100 trades, that's $20. Take it. Don't be afraid to take it. Don't be trying to wait on more. Because shit, man, even when I first started this, I had 4 losses in a row. I think the world's over. I ain't got but $1,000 account, but just keep going, man. I had 9 or 10 different trades that were winners right after those 4 losses. So there's going to be a lot of challenging times in this challenge that you're going to be like, damn, I'm just getting stopped out left and right. I'm always losing. It's not going to always be true. You just got to manage what you can, take your stop losses, and try again. So we'll get to this later. Let's go back to the PowerPoint. Okay. The objective is earning 5% daily using the compound effect. A lot of people don't realize the compound effect and how fast it works. But truth be told, if you're earning 5% of your overall account per day, naturally over about a 2 or 3 week period, you're going to double your account. And that's if you're trading every day, of course. But, you're going to have days where you don't earn your 5%. Some days you're going to earn only 2%. Some days you're going to lose 2%. Some days you're just going to lose all the 5%. If you stay on the 5% plan and you make sure you're limiting your losses to 5% of your account, you're only going to be stepping back 1 day in the plan. And I'll explain this later as we get in. I can show you on the compound plan itself.
Hey, just to be clear, that's 5% of your total account, right?
Yeah, use 5% of your total account on one trade at one time.
Right.
No more. So using only 5% of your account ensures that basically you're not going to go back but 1 day on your plan. If you look on your plan, I'll show you later, 5% of your account is what you're supposed to be earning a day. So if you're only risking 5%, you're only risking a day in your plan. And I'd much rather go back 1 day than go back 10 days like I have in the past. I've done it several times. I blow out my account, get liquidated or lose half my account or whatever the case may be. I've done it. So I had to learn from it. It's just, you got to be more careful, and you got to also utilize that mindset where you need to manage all of your trades to a break-even state, so that if the trade was to go against you, you at least break even. That's going to be the number one goal in this whole process, because I can't tell you how many times I got stopped at a break even. I get mad because it goes my way, but there's another trade right behind the trade you just lost or broke even at.
Always another.
There's always another trade. And it's something I had to face myself. I get mad. I want to fight the trend, whatever I did with the ES, it's the same scenario. The rule is you always have to use stop losses. You're going to have to use stop losses while you're trading crypto. As I think we've all seen, crypto can turn around on the drop of a dime. Like 5 minutes, you see a 100-point move.
Yeah, it's so fast. You've seen some of the wicks on those bars.
Yeah, I mean, you got to use stop losses. You can't run around naked. I'm telling you. So when you're in a trade, you're going to have to adjust it to stop. You adjust your stop to break even or as close as you can to start minimizing your risk that you got out there originally. So if you're only looking to lose 20% on your position and 5% of your account, that's basically going to put you in a position where you're only losing 1% of your account per trade. Right?
Hey, Raleigh,
Yep.
would it make it easier if I know because you're basing this on, I believe, basing it starting on with $1,000. If you broke it down into dollars, would that make a difference instead of talking percentages?
It's all going to be percentages from here on.
Right, but I mean, when you say okay, you start with 1,000, you're saying so. You're
5%.
using 5%, so $50, right?
Yep.
So basically, let me just ask this real quick. So basically, when I'm looking at this, it says earning 5% daily using the compound effect. So you'd be actually, if you put $50 in on a trade, when you were profitable by $2.50 on that, you'd pull it out. Is that correct?
So actually, you'd be looking for a $10 profit. Because
Okay.
if you're risking 50 and you want to take a 20% profit, which is going to be 1% of your overall account.
There we go. That was my question because it says earning 5% daily. So that was my question.
Yeah. So I'll get to that I think a couple more slides ahead. I'll break it down a little bit better.
Sorry.
You're good. So most of us that use the BIMTF system, we all know where our stops are going to be generally. And I think everybody's trying to use their BIMTF system to how it's supposed to be used. And I'm encouraging that. But sometimes you can also be a little bit more aggressive with crypto, and you can still minimize that risk and start break even in your trade. Even if BIMTF suggests that you kind of wait or not move it yet, sometimes in crypto, you're going to want to move that stop to break even. I mean, there's absolutely no reason to leave 20% out on the table when you can at least get it to break even. The price is far enough away from you. I know we all don't want to get stopped out early, but the frequency and the amount of times you can take another trade is out there. So I'm not afraid to lose on a break even stop. I've probably had 30 of them since I've been doing this. I mean, hit my break even and it just keep on going my way. And I could have had a lot of profit, but it is what it is. Don't focus on just one asset. Now, me personally, I've been just trading Ethereum in the last 2 weeks and only Ethereum. But you shouldn't limit yourself to one asset. There's several on ByBit that, they move in high percentages. Even when Bitcoin and Ethereum only move 1 or 2%, some of these other little altcoins, they move 5 or 10% every couple hours all the time. So what that'll equate to, if you're using a 10x leverage, if an asset moves 5%, you're going to be 50% in profit on that position. So you're only looking for basically 100% to profits a day, if you think about it, because if you're risking 50, you're trying to make 50. So if you're only looking to take 5 trades, you want to break it up into 20% trades, you're still looking for 100% profit. But you're only going to need a 10% move total. And if you got to do that in 5 2% moves, that's 5 trades, right? It's 10%. That'll be 100% profit for you. But there's several assets out there that move a lot better and a lot against you. Like, just because an asset can move 5% in your favor also means it can move 5% against you, which is going to be a negative 50% loss.
Yeah, the ones that are high reward tend to also be high risk. And that's why the stop losses are super important.
Right. So you want to be careful with that. I mean, I'm going to give you an example. Unfi moves 10% a day all the time. I mean, I think Starscape, you and I see this every day. Unfi just moves unreasonably against every asset all the time.
Yeah, always.
But whenever it's on your side, I mean, it's a good asset to play, because if you're looking for a 10% move, you've already made your profit for the day. If you threw that $50 at there when you're taking your first trade with $1,000 account and that asset's already moved 10%, you've already made your $50. You can stop for the day.
Yeah.
What's up, Fluff Daddy? You finally made it?
What's happening? Yeah, fuck, I couldn't log in. I had issues logging in. Now Zoom says, "Oh, you gotta have an app in order to get in," and all this so dumb, crazy stuff.
Yeah, a few of you have had that issue, but some people I'm gonna have to record this for. They're having the same issue, and I don't have time to get to all of them.
Already.
But you ain't missing nothing. We're on the first page. How about that?
Already.
So once you've taken a stop loss, guys, please, God, don't revenge trade. I mean, I'm not a saint to this. I've done it myself and I've learned from it. Well, I think I've learned from it until I do it again. So don't revenge trade, man. Just move on. Just close that asset, go to a different one. That's the best thing you can do. There's an option in ByBit that allows you to change from isolated or cross margin. I recommend everybody use isolated leverage only, because cross leverage basically opens up your whole account for liquidation. So if you put 10% of your account on a trade for 5% and that trade goes 10% against you, that's going to be a liquidation of your account. So be careful not to use cross leverage. That's very important. You want to have isolated leverage, and you want to still be using stops before it gets to your liquidation point for that position. You're not going to ever try to let your trade go to its liquidation point, which is probably going to be a 10% move, which would be basically a liquidation for anyone using 10x. We'll get to that later. I'll explain that in more detail.
There will be some examples here in the later slides. There's some things we can do.
But if you want to be a little bit more conservative, and if you're new to leverage trading, you're not really going to know how this works, you want to use 5x for now. I suggest just take this down to half. You're just going to have to work a little harder, and you're going to have to cut your goal down a little bit more. But this will get you used to the program. If you just want to use 5x for now, that's fine. All you got to do is you're going to have to make 10 trades instead of 5, basically. Or if you get lucky and you get your 100% for the day, you just get out. But let's move on to the next slide. Hey, 2 more people in the room. Okay, so late joiners. Most of that's my fault. We goofed off till 9 o'clock. Welcome, Jake. Jake, can you hear me?
Yeah.
Okay. You missed the first page, so I'll go over briefly with you real quick. How about that?
No. I was on my phone.
Oh, so you saw it?
Yeah.
Okay, cool. Everybody who doesn't have a plan needs to go ahead and get a plan from compounddaily.org.
Okay.
/calculator.
Do it.
You're going to want to put your starting amount in. I'll show you guys how to fill it out on the website in just a minute. But if you want to start with 100, if you want to start with 500, or you want to start with 1,000, that's up to you. But this can be done with any amount of money. You can start with $100. Anybody can. Yeah, I mean, it's going to be a building process, and it's going to put about, I don't know, an additional 2 or 3 weeks to your plan. So it's not, there's nothing wrong with starting out small. I've had to do it before too. If you look at your plan under the earnings column, this is what your trade size should be per trade, and only 1 trade at a time, because this is going to be what you want to make for the day to complete that day of the challenge. So if I'm only going to be taking 1 trade at a time, I'm going to be putting $53 on my first trade, which is what you see right here in the earnings column on the first day. manage this until, like when you're in a trade, you're looking for 20% profits to be conservative. As we know, we can see 4 and 5% gains on an asset, and you're automatically going to get 40 or 50% gains for that. That doesn't happen as rarely as 20% is going to come to you all the time, especially in one candle. But they happen, and you're just able to advance a little bit, take it for what it is, but don't get emboldened that you made half your profit for the day and you get too excited and you feel like you should just be throwing a little bit more risk out there and making some more. Don't do that. That's the number one mistake that I do all the time. I get real happy and get real excited because I met my goal for the day, and I don't leave things alone, and I come back in here and I blow out whatever I made for the day and then some. So keep it at a slow pace. You want to stay on your day, and that's it. You don't want to go to the next day. If you've made your daily goal, man, stop. You're doing this in 100 days, not 100 hours.
Yeah, it's a marathon. It's a marathon, not a sprint.
Yeah, I mean, I'm not a saint to this. I mean, I've done it myself, so I'm speaking from experience here.
Hey, I mean, and if there's a day where you get lucky and you go over, thank your lucky stars, right? But don't get greedy.
Greed,
Yep.
for lack of a better word.
All right, so
Is
just
good.
what I was explaining
What?
a minute ago,
No.
your daily
No.
trade size
No.
is going to
No,
be
no,
your
no.
earnings column for the day. So if you're on day one, it's $50 to start if you've got a $1,000 account. You need to be looking at taking $10 profits, which is a 20% gain on that position. 20 times 5 is 100%, and that's going to be 100% of 50. So it'd be $50. So just look for $10 trades or $10 profits. We're going to get into showing you how to use the trailing stop to try to minimize that risk while you're in a trade too. Now, something I need to discuss with all of you guys, because this is something I've had to learn recently too. Limit orders and market orders have a drastic cost, and the amount of money that I've had to put on trading fees that could have been in my pocket would have put me a lot further in my plan, believe it or not. Probably about $1,000 more I could have had in my pocket by now. So I'm suggesting that you guys use limit orders as much as possible, because it's only a sixth of what a market order is in fees. As you can see depicted in this picture down here at the bottom right. Let me go back. The fees paid on this market order where I was closing that position, because instead of me using limit, I hit market, and I paid $33 in fees, while I could have just used $5 in fees. So big mistake on my end right there. I could have saved 25 bucks, 28 bucks. So keep this in mind when you're making orders. You want to use limit as much as you can, because these market orders, what ends up happening is you're going to pay so much in fees, and you're going to be like, now I knew I just saw it on the screen. I was $60 in profit, and now I only got $30 profit, because half of it went to your fees. And you're going to get a lot of slippage too when you hit market order. Like crypto has a lot of slippage amongst a lot of coins, and you're not going to get as much slippage with Ethereum and Bitcoin, but things like Unify, Sol, Luna, all those little coins with low market caps and low volume, you're going to get a lot of slippage. So you're going to be getting the worst price fills when you hit market order. So be mindful of this. Here's the desktop version. The mobile version looks similar, but when you're placing an order, here's where your limit and market order tabs are. So I would only suggest using a market order in an emergency situation. And what I mean by emergency situation is the market looks like it's fixing to go to hell and tank, and you're trying to get out of your trade real quick. I have no problem you hitting that market button, because if you want to get out of your trade as fast as possible to save your account or save your position, that's fine. But just try not to regularly use it. You know what I mean? All right. A lot of people don't know where to put their stop losses and trailing stops, and they want to question whether they should, how much of a distance they should for each asset. That's going to vary, and I'll explain that in a minute too. Ideally, you want to generally set your initial stop loss or trailing stop to equal a 20% loss against your 5% risk you place on each trade. And I'll explain why this is important in the next section. But always use your and never remove your stops. I have in the past had a habit of Starscape. You just saw me a week or two ago. I was on a session with him, and I saw the current price just barreling towards my freaking stop, man. I mean, it was just racing towards it. And I was like, I'm gonna lift my stop for a minute. I'm gonna let it breathe. And what ended up happening is I went into a 60% drawdown overnight because I let my stop run wild. So that's something you don't want to do, man. I could have lost my entire account doing that.
You got real lucky on that one.
Yeah, I did, because the market tanked the next day, and that's just pure luck, man. I had no business even being in that trade, and then on top of that, I lifted my stop and I shouldn't have. So it's a learning event. But anyways, you don't never know when the market's going to turn against you, and you'll be in a much bigger loss than you anticipated. So there's no exception to this rule.
Do not drop the stop.
Don't drop, man. Please leave your stops alone, man. I don't care what it looks like. I mean, if price wants to rocket to it, just let it be, man. It's not worth it. I do highly recommend Manish's IMTF or VIMTF system for anyone who's trading equity, stocks, crypto, or just volatility in general. If you'd like more information, you can go to his website, imtftrade.com. But a few members already have the IMTF system to help guide them in using their stops. So if you don't have access to IMTF system, like me or Starscape, one of us would help you get started on, learning Manish's system. So just let us know. Inside the score, we can further help guide you along your journey. And I encourage all of you to ask questions regularly, because I don't know where people need help. Some people will ask the questions after they've already made the mistake. I mean, if you think you want to do something and you need some advice, please never feel obligated that no question's dumb. It's not. You can ask anything in that score. Somebody's going to help you, whether it's me or Drew or anybody knowledgeable in whatever you're asking. So here's how I manage finding how much my trailing stop distance needs to be. So if I'm entering a trade, as you can see, for example, right here, I entered it at 1556. If I want to take a 20% stop loss on this trade, I'm going to measure from that price that I opened up my trade at, and I'll measure 2%. So if we're using 10x leverage, 2% is going to be equal a 20% loss, right? So on this trade, I put $300 on it. And the reason why I have $300 on it is because that's my daily trade size right now with a $7,000 account. So I'm only looking to lose 20% of that on a stop. And a little while ago, I did get stopped out. I'll show you guys where. But use this measuring tool over here to your left. You take this little ruler right here, and you'll go over here and just measure from your entry, and you measure 2%, and that's where you'll place your stop. You can place a stop, or you can place a trailing stop, whichever one you want to do. But the advantage of having a trailing stop is if I use the trailing stop and price goes below 1556 and starts going towards my target, that's going to start minimizing your risk, because your trailing stop is going to follow you. It's going to, instead of you losing 20%, if price goes down here and turns back around, you're going to lose 10% instead of 20. But so basically your trailing stop is literally mitigating more of the loss that you could have avoided. And you don't have to attend to it. It's going to do it on its own while you're working, while you're out on the boat, while you're drinking a beer, while you're selling cell phones at a Verizon store. So it just takes some of the guesswork out of it for me. I know trailing stops kind of jerk down with price and then price jerks back up and hits them all the time. But it takes a lot of the work out of, you know, whether you should be moving your stop or, you know, whatever. It just kind of automates things.
Well, and those huge spikes that might stop you out anyway tend to be trades that are a lot more volatile and may not be trades that you want to be in anyway. Does that sound fair?
Yeah, and the thing is, if you can see right here, this one went up and stopped you out and then went back your way. And these are the ones that piss me off. But like I said, man, there's so many trades after.
Well, that's just the nature and volatility of crypto in general, right?
Yeah.
It comes with it, right? But to be able to, you know, do this like a machine is really the key. You know, when you start looking at this or lifting your stops or getting pissed off that you got stopped out, that's all of that. It's emotional trading, and that's, you know, the exact opposite of what we're trying to teach in the Discord.
Yeah, and that's usually what ends up getting people wrecked. It's not because people made a bad trade, it's because we went back in and either tried to fight a trade, or we was mad because we got stopped out and we want to get back in. We feel like we're going to miss out on what it was really doing.
Yep.
That's basically what I've done before. So
I've done it too.
But it's all experience, man. And I'm trying to teach you guys and be as transparent as I can, man. So this is an example of a trade that I was using a trailing stop on. And if you can see the trailing stop distance down here on the bottom, I had a $5 trailing stop on it. So Ethereum is 1555 when I entered it, or 1556. So basically when I activated that trailing stop, my trailing stop started at 1561. And then as price went down, you know, as you can see right here, let me annotate it. So basically when I activated my stop, it was right here. From current price to here, it was $5. And then as price started moving down, which is now here, my stop followed me, $5. So now I'm in a free trade. This can turn around and hit that stop, and I'm not going to lose anything, and I can go back to work. I know I'm not going to lose any money. I might lose a little bit in fees, but instead of it going all the way back up to my original stop where I had it, now it's free. So, but what if this trade kept going? Guess what? That stop right here is going to be following it. Now that stop's going to be about right here. So you see I'm $10 in profit on this right now. So basically, if price kept going down and that stop furthers, then I'm going to be $20 in profit. And I'm going to get stopped out in profit if it goes back to it. The trailing stop takes a lot of the work out, trust me.
Yeah, and it's important for people, you know, a lot of us here, we have other things that we're doing during the day. We can't always keep our eye on these 24/7. So it's really important to automate these as much as possible, right? It's like set it and forget it. And once your trailing stop moves past your entry price, you're golden, right? You're going to make profit regardless. So to get into the habit of this, that's why he's encouraging to start minimally with like a 5x, so that you can get the hang of the system first with minimal risk, right?
Yep.
Then start to ramp it up just a bit. Obviously, you're never going to go over what was suggested here, but this is why he encourages to start small, right? Start small, get used to the system, automate this as much as possible. That way you don't have to look at it 24/7 and keep your eyes on it. You can let the system do the work for you.
Yep, absolutely. And this caters to the ones that are working, because I'm trying to make sure, you know, we don't have to have our eyes glued on the computer at all times here. I mean, naturally, I'm going to be in front of the computer all day. It's because of what I do. And I know there's a lot of people out there that just absolutely cannot be in front of the computer all day or the phone, and need to keep some automation in their system. So this is going to be it'll be interesting to see if it works out for everybody, because I'm thinking that it will. Okay. Let me give you guys some tips and some guidelines to go by for the trade management once you're in a trade. because there's going to be a lot of confusion as the percentage factor. You know, some people don't understand the percentage factor in the way I do, but I'll help break it down for you. So always keep this in mind. If you're using 5% of your account on any one trade, a 20% gain for that trade will equal a 1% gain overall against your entire account. Because if you're risking 5% and you get 20%, going back to that, you get 1% of your account overall. So $1,000 account, 20% gain with using 5% is going to be $10. And if you do that 5 times a day, you met your daily goal. That's it. You should only be focused on making your goal for the day and today only. Getting ahead of yourself or your plan will get you too excited or emboldened and then ultimately wrecked. One step at a time. And ideally, you should only be targeting a 20% gain and moving on to the next trade. Or, as long as your risk is resolved, and what I mean by this is your trade has a stop at break even or a little bit of profit. You know you're not going to lose on that trade, you can take another trade. And you can continue to do this until you've loaded your whole account up with free trades. And this is something Manesh has taught me. So if you're in Manesh's system, you already know how he teaches the free trade status, and you go take another trade. You keep on loading up your account with free trades. And if the market goes severely your way, then you got more than one trade going in your favor, but they're all risk-free. So if you have 10 trades out there and they're all break-even status, what can go wrong? What are you going to lose? So you can take more than one trade at a time, but only if you've managed that one trade that you've taken originally to break even. You cannot take 5 trades at a time, then go manage all of them to break even. You have to do it one at a time. That is a must. So sometimes if you make a break-even trade or a free trade, whatever you want to call it, you can let that trade ride and see how much more it wants to go. Just make sure you're not going to lose anything on that trade. So ensuring that you're only using 5% of your account on any one trade will ensure that you only step back one day in your plan should that entire trade equal a full loss. You should not experience this unless you're refusing to use your stops or you're lifting your stops like I did. Ideally, you should only be using a minimum of 20% stop loss. So that's 1/5 of your trade for the day. If you're using a $50 trade, you need to be taking a $10 stop or $10 profit. Or if you made it to break.
Just to clarify, it's a 2% move on the chart, but it's 10x, so it's 20%.
Right.
Yeah.
Or if it's 5x, for example, the ones that want to trade conservatively, it's going to be 10%.
Right.
Yeah. So, yeah, just calculate however the leverage you're using. But for the love of God, please don't exceed 10x. I just don't believe in this 50x crap. You can take a $10 trade at 50x. That's cool, but your liquidation point's still close. I don't care what you're trading. But if you risk more than 10% of your account or more on any one trade and it goes south, then, well, that's 2 days you're going backwards instead of just one. And God, if you use your whole account like I did the other day and you lost half your account, guess what? I'm going back half of my plan. If I'm on day 40, which I am right now, and I lose 50% of my account, I'm going back to day 20. And I got to do them 20 days all over again. You don't want to do that. It's a gut-wrenching feeling, especially when you work so hard to build that. Most important rule to remember, though, you can only take one trade at a time until your risk is resolved, meaning that trade needs to have been managed to a break-even state before moving on to the next trade. There is no exception to this rule. But I think we've gotten to a point where we can answer some questions. Anybody got any questions? Derek, what you got for me? I know you got some questions up in that big head of yours. It's probably why you wear a hat. Keep all the questions hidden.
Yeah, I was just gonna tell if anybody has a question that they think is stupid, make sure to just text it to me or send it to me because I don't have a problem asking a dumb question. So I'll be your mouthpiece. No, I'm just curious looking at this, because I haven't gotten on the crypto train. I've been talking to you about getting in there and stuff. So I'm trying to equate this to different. Here's an example. So I talked about it earlier tonight when you were doing your thing, trying to get Starscape to figure out his computer or whatever. But I took some spy puts, and like an idiot, I had 70% profit, and I said, oh my God, I got another day. This is just gonna keep going down. I was an idiot. So on those, I need to be religious about those. I need to put stop losses on those. I don't do that. And I need to be pulling out at, I keep telling myself 30%, and then it shoots up to 70%. And you're like, well, shit, I got to keep rolling here. But like an idiot, the next day, what happens is they crushed it down and I lost it all. So, it's about discipline and, understanding that, okay, I'm only getting $20 or whatever off this trade. It doesn't matter because this is a process. You're compounding your profits, and it gets to the point where that 5%, that 20% profit is 500, 1,000. I mean, that's what we're shooting for. And so I need to understand that I need to quit being an idiot.
Well, the greed factor is going to be in all of us naturally. Nobody's immune to it. I don't care who you think you are and who you say you can be, but the greed factor is in us all. We're always going to want more, but you have to systematically come up with a strategy that is going to be more of a machine, like Manesh teaches us. You have to say, I don't care if this asset can go to 200%. 20% I'm okay with because it's a fifth of my goal for the day. You have to have a goal, and you have to have a plan, you have to have an outlook, and you have to have an exit. So make your exit with just anything you see green. If that's what helps you. If you see green on the table, just take it. If you don't do anything but just take half of it, take some of it. Because even if you're only taking half of it and the other half goes south, man, you made out of it with something instead of going completely round trip. I've done it. I still do it.
No, I have burned my account up waiting for more, and then watch it just fall. And then you get the whole, so well, it'll come back. And then therefore you've lost a couple $100 just like that. And so I've started to, if I see $10, I'm grabbing it. If I see 20, fine, I'm grabbing it. And so I've just set a little goal for myself for now to build back up at $20 a day. I'm not even focused on percentages, because if I can get $20 a day for right now, I'm totally fine with that.
That's $600 a month. That's a lot of money to people.
Mm-hmm. That's right.
And that's a quarter of my cost of living here. So it's like $20 a day is better than nothing.
Mm-hmm. That's all I'm focused on is $20 a day. If I can hit it, great. If I only make 10, whatever. My goal is to play my stop loss tight and don't wait for it to come back. Just, if, like you said, Raleigh, see green, take it. That's where I'm at.
Look, statistically, I've learned something in the last few months, maybe 6 months now. I've learned that any position that I've had to sit in for 2 or 3 days or more is always been a loser. Every last one of them.
Yes.
So if somebody can take that advice and use that in their strategy, so man, listen to that, because look, I'm telling you, my wife sits there and watches me sitting in the trade for 3 or 4 days, and I'm just moping around the house. I'm just being a total dickhead. And I keep watching my phone or going back and checking the computer, and I'm only watching it get worse. I'm only watching my trade get worse. It's not doing me any good mentally. it's not doing my portfolio any good and hanging on to it when I could have been making another trade.
That's right.
Absolutely.
So, man, if you see green, take it. It's
Yeah.
money.
That's right, because those little wins build up, and then, like with the compound, before you know it, 10% of 1,000 turns to 100. Well, that what you're able to put on the table increases every time, and therefore
Exactly.
the money starts coming in quicker.
The thing you guys need to understand too is when you're compounding. Let me show you my compound plan. As your trade account gets bigger, look at your trade size. It doubles. Like when I'm supposed to be at $2,000, I'm now taking $100 trades. So this is like, it's an automated race, is the way I see it. And the bigger your account gets, the faster it goes.
Yeah.
I'm at $7,000 and I'm earning $300 a day on average now. I started out with only $1,000 and I was only making $53 a day. Okay, maybe I wasn't. I mean, according to my trade history, but I was only supposed to be making $50 a day, and here I was starting out. I had 2 winning trades. Look, I had a $136 winner. I got real excited and I went in again, and look what happened afterwards. 1, 2, 3, 4, 5 trades and a loss, all in a row. So this was me starting out right here. This was my $1,000. This is where it went. And then, you know, I didn't give up. I kept my risk the same as I made my first 2 trades. And the next 10 or 11 trades after that, I were all profits. Every one of them. They were all small, but they were all profits.
Yeah, that's right.
And, you know, you'll give one back every now and then on a stop loss or a break even. And basically, these $4 trades are break even trades. It's just minus the damn fees, because when a stop loss or a trailing stop hits, you're going to be automatically taken out at market order. You're not going to be given the option to choose limit. And that's something we can't avoid.
Okay. So the question here is, I'm assuming this means we have to be on a margin account, or how do we get by the PDT rule?
No, there's no pattern day trading in crypto. There's none of that. So if you're trading on the stock market, yeah. And there's all different rules. You got IRA rules, because you can only trade futures with a $25,000 account. Unless you have a cash account, you need to have a $25,000 minimum balance every day, 2-day trade, but not in crypto. Crypto is all wide open. You can trade as much as you want, anywhere you want, as long as you have a Mexican residence or Bahamas, you know, something like that. Wherever you live, you can't trade this in the U.S. So,
yeah, if you're in the stock market, you can day trade. Just don't take don't take a day trade 4 days in a row or 4 times in a week.
Yeah, you can only do it 3 times in 1 week in a 4-day period.
Yeah, I've got my 3 limit before, so.
Yeah, you hit that 4 mark, you're done.
Yeah, if you hit that 4 mark, you don't want to do that. Don't do that.
You'll get a warning. You'll get 1 warning for a lifetime. So if for example, I had to do it too on TD. I got to my 4-day trade limit, and they'll give you a one-time warning, and they'll go ahead and lift and reset your account. You're not going to be listed as a pattern day trader, because you can just say you made a mistake, you didn't know, or you know, your orders hit at all different times, and you know, whatever. But they'll only forgive you once. Not every broker forgives you once either. Most will. Robinhood will forgive you once. TD Ameritrade will. I think Fidelity will, but it's still not worth the risk. You don't want to be flagged as a DAG trader, because you're not going to be able to trade for 90 days or 6 months. I don't remember what it is. So I'm going to also share this spreadsheet with you guys. It's basically an export of my profit and loss via ByBit. I can just go over here to the export button, and I can choose whatever day I wanted to start, which was the 20th of September to today, and I could just export it. And take the fields on a blank. I just take these fields right here and I conditionally format them and put a couple rules in there to make all the colors. So basically this will give you a visual of where your winning trades were against your losses, because you see the red X and the green check. You can just make all your fields show up, whether it's a negative or a positive. So that'll help you get a visual of where you are at in profitability. I'll show you guys how to do it over in Discord some of the time. But man, you gotta have some more questions out there. I know somebody's got something. Anybody got any questions?
So this may be a little silly, but so trading these cryptos, because I don't dabble in them myself. Are there options on cryptos, or is it just strictly you're just buying the shares? Is all you're doing?
Well,
or buying the coins?
You're just actually, when you're leverage trading coins, you're not actually buying the physical coin itself. It's going to be a derivative through USDT. So basically, you're just using USDT, which is basically a cash a dollar amount to peg to the US dollar.
Correct. So you're getting fractional amounts of what you're getting.
Yeah, and basically, since this is leverage trading is actually designed to make your trade cheaper. It's not designed to make you risk more. It's designed to make your trade cheaper. So if you want, let's just say you want exposure to 10 Ethereum instead of just one, and you would only have to put up $1,500, and you have exposure to 10 of them. So you're going to have a $15,000 position instead of $1,500. So basically, that's how leverage works. So your leverage amount, like I'm 10x. If I put up $1,500, I got exposure to 10 Ethereum, because Ethereum is $1,500 right now. But it doesn't matter what you trade. I'm only taking $100, $200, $300 trades with Ethereum, and even though it's only a fractional amount, it's still a sizable position. It's that's still a $3,000 position. That's almost like 2 Ethereum, right?
Yes.
So if price moves $40, I've already made my money for the day. So it's the same thing. It's basically, but there is options on here for Bitcoin, but I don't dabble in them. I don't understand the option system on the crypto side, but not very many exchanges offer options now. It's just all coin.
Just all coin.
Yeah.
Jake, how about you, man? I ain't heard from you.
Yeah, no, I'm, you and I, we've basically been over all this. This is just,
refresher.
Like a refresher. No, I'm good with it, man. Let's just fucking roll with it.
I'm just glad you understand the system, man. I mean, if anybody doesn't understand, they're gonna have this to fall back on. I'm gonna share the PDF with everybody. But this will give a pretty good guideline. If you got any questions other than that, you can just drop them in the Discord. We'll answer them every day.
Yep. We'll have this posted in the Discord, so anyone can go back and look at the slideshow. Yeah. And if you guys want the links to anything afterward, right, just let us know. We'll get you the links to the calculators. It'll chart it out for you. I definitely recommend printing it out, having it somewhere, or if you're more digitally savvy, you can do that way as well. Just so you can keep track of, every single day, right? Building that 5% each day.
Yep, scratch it off, man. You guys seen the pictures. Oh, and also, not everybody is in the thread for the 100-day challenge. So in a few minutes, I'll go into the general chat and I'll post a link to the thread for the 100-day challenge. That way everybody can stay in the same channel.
And if for some reason you guys can't see it after he does that, just let one of us know.
Yeah. We'll help you out. I think that's it, man.
Let's just fucking roll with it.
They can go,